Today we are jumping on a very interesting debate in the IT industry, that is TCS versus Accenture. And this debate is there because TCS has been challenging Accenture's market share for last 2-3 years very frequently. This makes it an ideal case for us to analyze this and put this into perspective. But before that, let me welcome all of you. I would like to tell you today on I think it's 1st of March, I have got my first 50 views in one single video. My last video on Citibank's blunder got first 50 views in my 5 videos so far. So that is an important landmark, not because it is such a significant number. No, it is very small number, I know that, but because I am able to find the audience which is away from the noise, the audience which is looking to keep up to the business around the world, what's happening on various sections which impacts all of us very seriously. So we are not into, let's say, noise entertainment or sometimes abuses. So there are likely chances that we will never become viral, but I'm pretty sure we will be moving at a very decent pace. Therefore, I welcome all of you once again. Thank you. Every comparison needs facts, data to support our claim. So whatever we are going to talk, it has to be based on data. So let's go back and look at the data from 2006 onwards, because I could not find older data. So let us see from 2005 or 2006 onwards data. I'm just talking about the Accenture data here, and let us look at the Accenture data. Accenture had about 17 or 18 billion dollars in revenue in 2006, and compared to that, if we look at TCS, I think here it is, TCS got about 4.3 billion dollars in revenue. TCS, by that means TCS was at least 4 times smaller than Accenture. That is in terms of revenue. But what happens in terms of let's say market share? In terms of market share, TCS was around, I think, 16 billion. Accenture market share was about 30 billion. While Accenture had 4 times the revenue of TCS, but the market cap of Accenture was about 2 times that of TCS. If we fast forward this in 2020, TCS had about, if we zoom this little bit, about 24 billion dollars. This figure is into rupees, which is India's local currency. Accenture revenue in 2020, the year gone by, were 44 billion dollars, and the difference between TCS and Accenture in terms of revenue is very wide. Let us look at the market cap of these two companies. In 2006, as I said, the market share of TCS was about 16 billion. What is the TCS market cap now? And these are approximate numbers. Okay, it is they have given that into, let's say, rupees terms, but it comes around 160 billion dollars, or maybe little higher than that. As you can see, TCS gone past Accenture on 25th of January. That is very recent example. In terms of market share of Accenture market cap, if you look at Accenture market cap, that turns out to be now 171. So about 15 billion gap is still there. This is not a huge gap which cannot be covered. Okay, now is that comparison fair? I doubt we have not done a fair comparison, because when we talk about two different companies listed on two different stock markets, geographies, it is never going to have to be a fair comparison. Why? Because share market move depends on lot of aspects. For example, how the broader index moves. So how New York Stock Exchange composite index moved over last 15 years, we don't know yet. How Indian stock market, which is Nifty 50, has performed over these years, we don't know yet. And how the local let's say the economy performed, and the performance of economy is directly reflected into the market numbers. If economy is growing at a faster pace, the stocks tend to move faster. These all numbers make decent contribution, therefore it is not a very good idea to talk about it. However, still for comparison we need to look at some of these numbers. While New York Stock Exchange, let's go and find the New York Stock Exchange. New York Stock Exchange performance, and let's look at last maximum and since 2006. And if we look at 2006 here, in 2006 New York Composite Index was around, let's say, 7,000 numbers, and now it is over 15,000. So the composite stock index has grown up by, let's say, 200%. And if we look at Nifty 50 in India, and we look at the same period, somewhere around here, 2006, it was around 3,000, and from 3,000 it has grown about 15,000 now. So the broader index itself has grown 5 times, while the broader index in New York Stock Exchange has grown only 200% since 2006. So that is a key differentiator. Because India is a growing economy, India's growth itself has been about on an average, because India has touched a high of around 10% and a low of about 4.5 and 5%. Therefore, if we average it out, it should be around 7.5, but let's not go too high, let's keep it 6.5. So that makes India's growth at least 2 times higher than the US growth on an average. Idea here is that the developed market grow about 3%, while the Indian economy were growing very fast, so that also impacts. While the broader stock exchange, broader index itself grew by 500%, TCS has grown up by 1,000%. It was about 16 billion, we found it somewhere, yes, 16 billion in 2006, and now it is about 160 billion. For Accenture, we looked at the Accenture number, it was about 30 billion, and from 30 billion it has gone to about 5.5 times, or let's say 550% they have grown, while the broader index has grown only 200%. So it looks like the growth of Accenture is really good. So the comparison or the market comparison between these two companies is not going to make our analysis very good, because it is not complete, it lacks a lot of data points. We are trying to compare two different companies listed on different stock markets, performed differently, and all these things. So we should not take that route. We should look at some other data points if we can gather. One key indicator which gives TCS an upper hand is their revenue trend, and their revenue trend over last 5 years, that is about these numbers, and they have been growing about 10.6% annually. While I looked at Accenture number, if I remember correctly, they are growing about 4% annually, but I'll have to check that again. Okay, the other key point is their operating profit and their operating margin. If you look at this data point here, since 2016 they were growing at very high operating margins, okay, 26.5 and 24.6 FYI 20. It has improved in their recent quarters, and when we look at the Accenture operating margins, they tend to be 14.7%. so it is significantly higher. TCS operating margin is significantly higher. These indicators gives them fair chance that in terms of revenue also they will one day surpass Accenture. Definitely. How soon we will have to see, because earlier they were growing at much smaller revenue base. If you have, let's say, $4 billion revenue annually, you can double that up quickly. But to double that from a 24 billion revenue annually, you will have to do extraordinary things. Along with their revenues and operating margin, some key indicators which reflect how TCS can really go way ahead of Accenture in terms of all the numbers in future is, that is all the broader number, that is revenue, operating margin, cash flow, their employee strength, their markets they cover, the number of geographies they cover. So everything they can definitely beat in times to come, because some key other indicators which are like employee metrics suggest that at about 450,000 employee base, their attrition rate has been always very consistent, about 12%, 11 or 12% on an average. This is quite a remarkable achievement, not seen elsewhere. I have seen many results: Infosys, HCL, Wipro, Accenture, Capgemini, and many other names. I have seen this across, and they find it very difficult to keep or retain the employees. Somewhere I found that their average employee age is about 31 years age. Very interesting. How do they maintain that? That is for another video. I'm telling you, they do some magic. Do look for that video very soon. They have had a very stable leadership. Earlier Mr. Chandrasekhar was handling TCS business, and now Mr. Rajesh Gopinathan has been the CEO of TCS. So the succession between these two has been very stable. That gives them a great appeal. One very critical aspect is their lower cost advantage. As I said, they are fairly a young company. That means their large employee base is about, let's say, around 25 to 28 years age group. TCS has about 350,000 employees based out of India and an average age of 31. Remember that, because lower the average age, that means the cheaper the resources are. In fact, Accenture has highlighted this as a big risk TCS can really benefit from, that is their belongings to a lower cost country, and they specifically highlighted India in that region, in that category. So TCS gets benefited with that. So all in all, there is both companies are very good. They are doing reasonably good business, and they are fairly well positioned to enjoy and reap the benefits for next many years with their investment in the right product strategy, future strategy, and the roadmap they have outlined. These companies are really, I would say, these companies deserve to be the market leaders. Who becomes number one or who becomes number two in terms of market share is really immaterial, as long as they are able to project the right ethics, the right practices, and they are able to lead by example. Because the smaller players look at these bigger companies to follow and set their own paths. So with that, I will conclude this discussion. I hope you got some of the ideas about how these companies are really moving in current times with similar videos. In fact, this video has two parts. One I already covered, which was more for a general audience, right? But I know lot of the people are either their employees or somebody who wants to be an employee in these companies. Maybe I will come up with one video for them also very soon. So till that time, stay connected, stay safe, and take care.